The first question is, what is insurance? We have been talking of pooling. Insurance companies works as an administrator of a pool of small contributions from large number of people exposed to similar risks. They are exposed to similar risks, but nobody is sure who will be affected and will face an accident out of this group. And this uncertainty as to who will face an accidental loss, damage or death, that fear makes them go for being a member of this pool, and the administrator, the trustee of this pool, the insurance company, collects this pool, manages this pool, and pays to those unfortunate few among this whole group of insurers to compensate for their losses and damages. What is the peril? It is the cause of loss. Separation and duplication are examples of what? I mentioned these words when we talked on risk management. Let us look at separation. I had given one example that some materials are stored in one big heap, one big lot. Say the value is 4 crores. If fire or some other accident has to take place or flood has to take place, you have a single lot of 4 crores exposed to this fire. Separate them out into small or segregate them out into small groups or small lots. Say if you divide them into 4 lots, each lot will be 1 crore. If there is a fire in one lot, it may not spread to the other 3. So what you are trying to do? You are trying to reduce the impact of a peril operating, an accident taking place, an event occurring. This is separation. Somewhere, somebody may put a concrete wall as a partition in a huge storage area, thereby creating different compartments separated. That is separation. The word duplication I had used while talking of backup data. Today, each industry, each facility, each activity depends on use of computers and related things to a substantial extent. And you use a lot of data, a number of files. All these are stored as soft copies. I have always said that have a backup of all these your softwares, data, everything, and store it at a place other than where you are manufacturing. A duplicate set of data is available somewhere else. So in the event of an accidental loss, you are not to go into remanufacturing, reproducing the entire data and softwares. Next question is, explain the principles of insurance. Basics: utmost good faith, insurable interest, principle of indemnity, and the corollaries of principle of indemnities are contribution and subrogation. And the last one is proximate cause or dominant cause of damage. In case of damage to ship and cargo, which is payable in case of marine hull? We have said this number of times that the marine cargo insurance takes care of cargo which is being transported by the ship, and marine hull insurance takes care of the ship which carries this cargo. So definitely the marine hull insurance will pay only for the ship. What is the difference between the franchise and excess? Excess or deductible is the amount which is deducted from each and every loss, each and every claim. if somebody says deductible or excess is 5,000, that means from each loss amount, rupees 5,000 are removed. A loss of 5,001, deductible is 5,000 or excess is 5,000, the payable amount is only rupees 1. In case of franchise, all losses up to this amount of 5,000 rupees are not paid, not payable. But moment the loss exceeds this 5,000 rupees, there is no deduction. There is a difference between franchise and excess. Let me repeat here that franchise is not in practice today in India. Average clause, this is also called underinsurance. Primarily in property insurance this is used. If the property worth 100 rupees is insured for 80 rupees, obviously the insurance company has received premium only 80% of what it should have received. So the claim also is settled in the same proportion, in the same ratio of 80 to 100. This is called condition of average or called as average clause. What is the meaning of periodic review with insurance premium? We have seen most of the policies in non-life insurance are annual policies, renewable annually. When you renew the policy, that means you are covering the same subject matter for similar perils or additional perils or new set of perils. At that time, how has the previous insurances performed? How many claims are produced? Take case of a client, if last 2 years, if you are an insurance company, he has paid 1,000 rupees premium for these 2 years and taken 8,000 rupees loss from you. Will not you like to increase the premium for the third year? So what you are doing in the third year? You are reviewing the premiums and terms of this coverage you offer to the client. So this is called the periodic review. Normally on annual policies, this is the annual review. Depending on the situations, somebody may review the client's account at shorter intervals also. What is the aggregate bank clause? This is a special clause in property insurance which records the interest of the financiers or the bankers from whom the owner has taken few loans. Say in fire policy, you will find somewhere in the schedule it is mentioned that stocks hypothecated to State Bank of India, rupees 5 lakhs. This indicates that the owner of this property has mortgaged stocks worth 5 lakhs of rupees to State Bank of India and taken a working capital loan of 5 lakhs from State Bank. If an accident has to occur, the State Bank of India's interest is in this rupees 5 lakhs stocks, identified stocks. So this interest of the State Bank of India who has given loan is recorded under this aggregate bank clause, which states that on loss on this particular stocks will be paid to the bank or to the client on appropriate discharge from the banks. IBNR stands for incurred but not reported losses. What happens if there is no reinsurance? Another question. Let us take a situation. What happens to a client who does not take insurance? If he does not take insurance and if there is an accident, he has to pay from his reserves for replacement or repairs necessitated by accident, either from the reserves he keep aside or from he has to take loans from somebody else. Both these situations are not that comfortable in working or running a business, and that is where insurance plays an important role. Similar situation will arise for an insurance company. If they do not share or spread the risk with other insurance companies in the world, do not achieve global or international spread by reinsuring. So what will happen if they do not take reinsurance? All losses will fall on their balance sheet. And there will be some losses, like we saw the devastating floods in Kedarnath. North India. We heard of those tsunamis in Japan. These are unpredicted, uncertain events. Even the floods which occurred in Mumbai in 2005, those are not the things for something somebody plans for a day-to-day basis. These are catastrophic things, and that is where reinsurance plays an important role in giving protection to the insurance companies as their client. Explain capacity of parties. This we talked while talking of contracts. We said that the parties should have the legal capacity to insure. The acts or the laws prescribe an age. Can a 5-year-old enter into a contract? Can your 5-year-old son or daughter open an account in the bank? They are minors, so on their behalf, you as their parents do that. Similar situation arises here. Who is the party to the contract? Who is the insured? They should have the capacity to enter into a legal contract. What is the meaning of general average and particular average? Particular average relates to partial losses in marine insurance. General average relates to a sacrifice. When does the sacrifice arise? Say ship is going into sea, and there is an imminent danger of sinking. So some of the cargo on the deck has to be deliberately thrown into sea to reduce the weight of the sea. Now what happens? By throwing this cargo, weight of the ship is reduced and the ship survives. That is, the sacrifice of throwing away, jettisoning this cargo has been successful. Now why should the fellow who owns this cargo which was thrown into the sea should suffer? So his loss is shared by others. That is called general average. What is the actual total loss and constructive total loss? We'll see this in the next slide. What is unit-linked insurance products? This is a combination of risk coverage, expenses of insurance companies. This together becomes always a premium for any insurance policy. There is one more element added here of investments into particular funds. And in this situation, the unit-linked policies have an investment element along with insurance. And there are choices for the clients to go into particular funds. The additional premium client can choose to go into different funds. There are a number of situations we discussed already. But it is a combination of insurance and capital market product. What is solution fund? It is a fund created by the governments and insurance companies together to pay to the victims which are affected or they suffer injuries or deaths due to hit and run accidents by motor cars, where the drivers and the vehicles are not traceable. Participating and non-participating, this we talked while talking of life insurance products of profit sharing. The policy with profits and without profits, where the profits made by the insurer, he shares with the client, that is profit sharing, and where no profits, without profits, there is no such question of profit sharing. And obviously, the premium for policies with no profits or policies without profits is lower than policies with profits. What is the work for rider? Rider, by and large, serves like an endorsement in non-life insurance to give additional benefits or additional coverages. Look here again at the actual total loss, constructive total loss, and general average, particular average. What I showed you while we talked on marine insurance. Actual total loss, subject matter of insurance destroyed beyond repairs. Constructive total loss, where actual loss appears inevitable or expenses for preventing actual loss would exceed the saved value of goods. As far as other property on land is concerned in fire and other insurances, we say constructive total loss is that loss where the cost of repairs exceed the sum insured. General average, we talked it just now. Extraordinary sacrifice or expenditure for the purpose of successfully saving the adventure, and particular average relates to partial loss. Thank you, ladies and gentlemen, for your patience and for a grand success in the forthcoming examinations. Thank you once again. Good night.